We're going to get some perspective now from Kevin Fitzsimmons of Sandler O'Neill. Kevin, I know you've been looking at the exposure of so many of the banks to this region of the country. You say there are still more questions than answers, but ballpark, talk to me about how concerned we should be about spillover.
I think it's definitely a concern, and I think what we tried to do in this report this morning is look at it in a balanced view. Where are the risks coming from? I think so far we've just been talking about a lot of the direct risks, the fishermen that are out of work or the tourism being down. And I think as time goes on, we have to talk about the secondary and tertiary type of risks, the real estate valuations. What about municipalities that have loss of tax revenue? How does that affect these banks? And that's what we're trying to explore.
Now, you've run the numbers. You've looked at the portfolio exposure here. It's not just the obvious regional banks. It's not just the SunTrust of the world. Talk to me about Bank of America, about some of these bigger names that have some exposure down here.
Well, the thing I'd point out first on the list is, not surprisingly, the largest banks come up at the top of the list. That's because we ranked it by total dollars. But what you really have to look at also is relative exposure. And some of those larger banks are not high in terms of relative exposure. So I think a Bank of America or Wells Fargo would be 2% or less of their total deposits. It's more when you get into the Southeast regional banks like Regions and SunTrust, and then into the Gulf South, more pure play type banks like a Whitney or a Trustmark, that you really have to look company by company.
Now, we're not showing those stocks right now, but I do know from your research report that so many of those that you just named there have already taken a hit. I mean, it may be early here, but are there opportunities that you're finding among some of those regional banks that have really experienced some selling since this disaster began?
I think there are. I mean, our general overall conclusion was to remain very cautious on this group. But for investors that can take a long-term time horizon and kind of fight the news flow here in the near term, we think names like Trustmark, which we already have a buy on, and then just this morning we upgraded Hancock to a buy as well. And I think this is where you get into looking company by company at the specific exposure. Hancock doesn't look good on a map when you look at their branch exposure in the Gulf. However, you have to take into account that the bulk of their Florida exposure was gained through an FDIC-assisted acquisition, which means the FDIC holds the asset risk, not the bank itself, and several other factors in distinguishing the exposure.
Yeah, no, it's a really interesting report that you put out here just this morning looking at bank exposure. And Kevin, we should also point out that you say it's so murky at this point, it's hard to gauge things. And you also point out the upside of job creation from some of these emergency response measures that are being rolled out. So it may be a slow rolling impact. We'll continue to follow that. Thanks for making time for us this morning.